who have joined us today. It's really great to see everyone for this session. We have many residents today, which is very good. And it's a session, a webinar hosted by AIGCC and TNFD on integrating nature into financial institutions, and especially with cases from Asia itself. I'm Monica Bay, Director of Investor Practice at Asia Investor Group on Climate Change, and also will be moderating the panel session today. We have really great insights from many speakers lined up, and today we will begin with an opening remark from Tony, CEO of Task Force on Nature-Related Financial Disclosures, TNFD, to frame today's discussion and set the global context. We also will have short presentations from TJ, who is the Asia Engagement Lead at TNFD, and also Wisnu, who leads the Nature, Forest and Land Use Working Group at AIGCC, followed by a panel discussion from esteemed presenters who are really active across this region and implementing nature-related disclosures across the board. With this, it's a really great pleasure to hand it over to Tony for your opening remarks.
Thank you so much, Monica, and wonderful to be with everyone. And first of all, let me thank AIGCC and everyone participating today for your support and for your time, and look forward to the conversation to follow. I think in the interest of getting us to the panel discussion, which I'm sure will be the most interesting section, I'll just keep my remarks fairly high level. And as Monica said, focused on why this is important. So answering the why question. We can get into the how, perhaps in the panel discussion, but I think being clear on why this is important for financial institutions is a good place to start. And also perhaps touching on some of the global momentum that we're seeing around the nature agenda. So without further ado, let me just offer a few opening questions. I think to answer the question directly, why is this important for financial institutions? Well, I think there are two fundamental facts that we need to accept. One is that nature loss alongside climate change is accelerating. And secondly, that every economy is 100% dependent on the natural environment. Without nature, we would not have an economy built on top of the planetary systems on which we depend. So we often see different numbers around 60%, 40% dependence on nature, and but ultimately it's about 100%. The other estimates are about the degree of or severity of the dependence of the economy and our societies on nature. So if we accept that we're 100% dependent on nature and the systems on which we depend are accelerating in terms of their decline in resilience, then we have a fundamental challenge, and that challenge will cascade its way through into financial returns for investors. And so a really simple way to think about this for financial institutions is that the future cash flows of the businesses that you're investing in depend on the flow of nature's inputs into those businesses that you are investing in. So think about nature flows underpin cash flows. And of course, cash flows are central to the valuation of portfolios, of the resilience of the businesses that you're investing in, portfolio construction, thinking and strategy. And so understanding the importance and the resilience of nature as it impacts on your future financial performance of your portfolio is a really important new aspect of investment strategy that we want to bring to bear in today's conversation. So think about nature flows impacting cash flows and portfolio returns. I think the other thing that I'll say, and I'm sure Emily will expand on this in her comments, is that a lot of people have been questioning whether nature is a financially material to business and to investors. And we just published a few months ago, we launched it at London Climate Week, a report with Oxford University and colleagues at a company called Global Canopy, which provides extensive evidence of the financial materiality of nature to business and finance. And there are some 600 examples or proof points of why nature is material. And so I think this has been a conversation that's been happening for a number of years now. I think we feel like the evidence is extremely clear and compelling. And so increasingly, we are starting to see investors globally, from sovereign wealth funds to pension funds to institutional investors, private equity, starting to ask the companies much more specific and granular questions around how they're managing nature as a source of risk and resilience for their business, recognizing that the company's exposure to nature as a driver of business performance is going to impact portfolio returns. And so that conversation is happening. Our hope is that this new body of evidence, which TJ can share the link for you in the chat, will really help to drive more investors to be looking at nature alongside other sources of risk and resilience in your portfolios. And TNFD has provided many tools and a lot of guidance to help you understand nature as it relates to your portfolios and the kind of questions that you should be thinking about asking to your investees. And so I'd encourage you to have a look through our guidance, because if we can get more investors thinking about nature as a source of risk and resilience to your portfolios, then we can help equip you to be asking questions of your portfolio companies. And that's one of the key goals of the TNFD. So we'll share with you today a bit more insight about this financial materiality point. And we can also share a bit more with you about where you can find practical tools and guidance to help inform your own assessment and the questions that you might ask of your investee companies. At a global level, we are working extremely closely now with the standards bodies, including the ISSB and GRI, to embed the TNFD recommendations that were published almost 2 years ago into the global standards landscape. And that work is moving extremely well, and it's moving actually quite fast at the moment. So there might be some questions from the audience, and I'm sure in the panel discussion about what exactly is happening there. Again, I'll leave it to Emily to say more about our collaboration with ISSB and how we might envisage the landscape for nature-related reporting. But I think the key message that I want to leave with all of you today is that while the regulatory landscape is important, the main driver for financial institutions to be embracing this agenda is your own enlightened self-interest. Nature is now, as I said, an established risk factor for your portfolios and portfolio returns. So irrespective of what's happening on the regulatory side, this is just going to be standard risk management investment strategy practice going forward, alongside thinking about other issues around supply chains and business models and cybersecurity and the future of AI. We have to think about nature in that basket of major drivers of portfolio performance. And to do that, one of the things that investors are increasingly looking for is investees or potential investees who clearly understand how nature is relevant to their business and what they're doing to take mitigating or adaptation responses to adjust to this transition to a world with higher climate temperatures, but also accelerating nature loss. And also hopefully going beyond that to contribute to a more nature positive world. And so we are working very closely with a number of partners and pilot testers at the moment on nature in transition planning. And I'm sure many of you are scrutinizing company net zero transition plans. And so we think it's really important to move beyond just a focus on climate change and net zero to be bringing nature and the broader aspects of nature into transition plan thinking. And so TNFD is working on that guidance at the moment. We have, I think, 14 or 15 financial institutions and companies with whom we are testing our approach. And we're planning to release that guidance at COP30 in a couple of months' time. And that will be, and again, another really important source of information to inform capital allocation decisions within your investor community. And the last thing I'll just say is that financial institutions are also now increasingly interested in understanding how they might be contributing to the global challenge of nature loss and halting and reversing nature loss, much as we want to try and understand financed emissions on the climate side. TNFD has also set about trying to provide practical guidance for financial institutions to understand how they might be financing nature loss and dependencies and impacts on nature across land, freshwater, and ocean realms of nature. So this is an important next frontier in our work. It's difficult, it's complicated. We are working on some practical guidance to help financial institutions answer those questions. And so I just wanted to highlight that this is work in progress. And we've got a discussion paper out at the moment, and we would certainly welcome feedback from everyone on this call today around these issues. How important are they to you, and how do you think you can be addressing some of the challenges around the use of your capital and the impact that it's having on the planet, not just on emissions, as I said, but on all of the other aspects of nature. So I'll just finish by saying that I think this is a really important agenda. Obviously, you're here because you agree with that. But think about nature flows and cash flows, and think about nature as being relevant to risk management, to strategy, and obviously to capital deployment decisions. And TNFD's guidance is designed to help you inform that decision making, whether it's through your investment committee or through risk and due diligence teams. And so we welcome your feedback and very much look forward to the conversation that we're about to have today with our panel. So thank you very much, and look forward to keeping in touch with all of you.
Right. Thank you very much, Tony, for your insights, and especially the newer developments that are happening under TNFD as well, which is very exciting. I think as a next step for context setting for the panel session, I do invite TJ as well as Wisnu to provide your short presentations. First, over to TJ.
Great. Can you hear me?
Yes.
Are you able to hear me?
Yes.
Yes.
Perfect. Perfect. So thank you, Tony, for a great remark. And I think after Tony's remarks, the next generic question is really like what's happening with TNFD now and where we are today. So I just want to quickly take you through just a couple of numbers. So from a global standpoint of TNFD and where the adoption stands today, we are this number is from last year in October. So we had about 502 adopters in September 2024. We will have another announcement this year at COP in Brazil, and we are way above this number of 500 now. So you can automatically see that there is a growing interest of companies from corporates and financial institutions who want to adopt the TNFD framework, and a growing interest from all parts of the world. And just speaking of, specifically in Asia, so TNFD currently is engaging with about 2,500 companies in the region, out of which 300 plus companies have confirmed their TNFD adoption. And a lot of these companies are already reporting against the TNFD framework, and you will see those results when TNFD also will publish our annual status report later this year. We have about 650 plus companies who are part of the TNFD forum. The TNFD forum is really for the companies to be, interact with the TNFD content and all the publications which Tony mentioned. And 80% of them are corporates and 20% are financial institutions. So we want to see more interest from FIs in general to start adopting the TNFD framework. Just a couple of sectors I've mentioned below, so I will not go in detail, but we see a growing interest from different sectors, from all different sectors who are interested to adopt the framework. Just also want to quickly mention that, apart from why nature is important, why are organizations adopting these recommendations? What are organizations getting out of it? So apart from just making sure that, their business is, they're managing their risk within their business, the organizations are also preparing for upcoming standards and regulations which could come in the future. So just being prepared for that. There are also new commercial opportunities arising from these, from aligning yourself with the TNFD or understanding your nature-based risk. We have seen a tremendous amount of opportunities within all regions. There are massive lending opportunities from a FI perspective, and there are other opportunities from a corporate perspective as well. And if we look from an investor standpoint, they see nature now, a source of a financial risk as well. It's not just climate, so they look at it from a nature standpoint as well. And ultimately, nature is just managing the nature risk is just good for the business. So we have to think at is not as a reporting exercise, but more as, what is good for the business and how we are really managing, managing the risk and then mitigating that risk and creating opportunity thereon after adopting these TNFD recommendations. I don't want to take too much time, so I just want to quickly mention a couple of small resources and guidance which are available on the TNFD website. So if your organization is already reporting against the GRI 101 or the ESRS, that basically means that you can automatically straight away start adapting the TNFD recommendations within your disclosure framework, because we've created a mapping document which kind of helps you align those specific documents like GRI 101 to the TNFD recommendations. So basically, we have done it so that it can you can avoid duplication. So a lot of these companies, NFIs who are reporting against GRI, do not have to create more duplication of work. They can just report against GRI 101 and then create a mapping document against it to showcase the TNFD recommendations. Then, as Tony mentioned, there are a lot of sector guidance available on the website. I will post the links of them in the chat below. So please go through them and they'll help you with your TNFD journey as you move along. One of the very important questions we get as part of TNFD is really the kind of different resources and how we can really upskill our own teams within the organizations. So I think TNFD, of course, in collaboration with CISL, the Cambridge Institute, we created a module, a TNFD module, which is basically employees can really upskill themselves. And so there is a learning lab. You can just go there. It's like a free course. You can just go log in and start learning about the TNFD and how you can disclose against that. It's a self-paced learning course, so take your time to do it and also motivate other folks in your organization to do that. If you're an organization who has multiple offices and has an in-house learning and development team, you can download the material and modify the material again with your own requirements, and then of course the material is white label, and then you can train within your own organization as well as externally. So there's a trainer portal as well available on the website. Everything is free of cost. Then there are of course sample reports. So if you're thinking, how are other organizations adopting it, how they're disclosing the TNFD against the TNFD framework, then you can just go and download these reports from the website. It's a lot of different reports from a lot of different companies. So great knowledge there. There are a lot of course, webinars and all the different knowledge, under the Knowledge Hub within the TNFD website. As Tony mentioned, we did some new publications recently. One is the Asking Better Questions on Nature for board directors. If you want to take this to your board for them to understand how to, what sort of questions they need to ask their management around nature. We've also launched some GRI and TNFD case studies, if you would like to have a look on how our organization is doing that. And of course, the financial effects or nature-related risks. It's a separate guidance. I've also shared the link in the chat below. Last but not the least, I would just quickly, reiterate and encourage that if your organization is thinking about adopting TNFD or working alongside TNFD, please be an adopter before Brazil. Or it's really just it's nothing but just to showcase yourself as a leader in the space, but also to highlight that you care about nature and you want others to also look into the nature-based risk and start understanding how they can mitigate those risks. And there is no requirement to start disclosing from day one. You can take your time, like TCFD, take it slowly, and then eventually over time disclose against all the 14 recommendations. So all this information is available on the website. And if there's any other further questions, please just feel free to write me, and then I can take the conversation from there. Yeah. Thank you so much, and looking forward to having an interacting session. Over to you, Wisnu. Thank you.
Thanks, TJ. I'll now share my screen. Can you see my screen now?
Yes, we can.
Yeah, thank you. So again, good morning and good afternoon for everyone. I'm Wisnu. I lead the Nature, Forest and Land Use workstream at Asia Investor Group on Climate Change, or AIGCC in short. Before we get into today's topic, I'd like to give a brief introduction to AIGCC for those who may be less familiar with our work. So AIGCC is an initiative that works with investors across Asia to raise their awareness, as well as to drive action on the risks, as well as opportunities linked to climate and nature. We currently have around 80 members from 11 different markets, and within AIGCC itself, we have the Nature, Forests, and Land Use workstream. And the goal of the workstream itself is to provide regional and country-level insights to help investors to integrate and as well as manage nature-related risks, opportunities, with a focus on nature issues that are most relevant to Asia. And through this workstream, what we are trying to do is we provide regional-specific recommendations that could help investors into integrating nature into their investment process. And we also facilitate peer-to-peer learning opportunities among investors through working groups, masterclasses, as well as training modules. We also deliver insights for investors that could support investors in building their case to take action to address nature-related risks and opportunities in the region. And also what we do is also we bring the investor voice into the regulatory and market discussion through policy brief, consultations, roundtables with key policymakers and other key stakeholders in Asia. And in terms of this work stream, looking ahead, we are planning to expand our focus around nature financing, nature-based solution, while continuing to address key regional priorities on nature, such as commodity-driven deforestation and the growing challenge linked to critical minerals. So now moving on to the report that we co-published last year called Nature at the Tipping Point. And this is very relevant to the point that Tony have highlighted earlier around the topic of materiality as well as dependence. And the purpose of this report itself to help investors to better understand the economic importance of nature within the Asia-Pacific context, as well as provide investors on the guidance on how to assess and manage nature-related risks and dependencies in investment portfolio. There's also 3 case studies from investors to highlight how they are integrating nature into their investment process. And this is really relevant to the points that have been mentioned earlier. And moving to the key finding itself, I think one of the first key finding that I would like to highlight is that 53% of Asia-Pacific economy has a high or moderate direct dependence on nature. And this includes reliance on fertile soils, clean water, pollination, as well as stable climates. And why does it matter? Because sectors with high nature dependency are more vulnerable to disruption to ecosystem if the ecosystem are degraded, if the ecosystem are destroyed, which could directly affect company performance and ultimately financial returns. Well, just now we look at the GDP or economic standpoint, we also look at the capital market exposure by looking at the share of the listed companies in highly or moderately nature-dependent sector across the stock exchanges in Asia-Pacific. And from the result, it shows that 58% of the region's total market cap falls into the category. In fact, 11 out of 14 stock exchanges in the Asia-Pacific has more than half of their market value in sectors that are directly dependent on nature. For FIs, this is a clear signal, whether through your loans, investment, or other financial activities, especially in this region, your financing portfolio are indirectly exposed to nature-related dependence and to extent nature-related risks. So understanding this exposure and how they can affect your financing portfolio is a first step towards managing nature-related risks. And just finally, based on those insights and our discussion with investors, we developed 6 checklists for investors to assess and manage nature-related risks. First one is to understand the expectation, and also the key information on nature. Second is to secure senior management support and commitment on nature. The third one is to develop a formal policy on nature. The fourth is to identify sector-specific initiative as well as standards that is relevant to the nature risk management in the key sectors that you are financing. Fifth one is actively engage the companies on nature-related risks. And lastly is to use TNFD to assess, manage, and disclose nature-related impacts, dependencies, risks, and opportunities. And on that last note, I would like also to highlight there are more and more financial institutions that are now adopting TNFD, which have been mentioned by TJ and Tony earlier, and this signals a stronger commitment to act on nature. And here at AIGCC, our role is to really actively support investors through this journey by providing insights, practical guidance, and platform for peer-to-peer discussions and collaborations among investors. So that concludes my presentation. I hope this can help provide some context for today's discussion. And now I'll hand it back over to Monica to lead us into the panel discussion.
Right, thank you very much, both to TJ and to Wisnu as well. I'd like to welcome the panel session next. We have very exciting panelists on board. The real reason is the explanation of the why and how directly from financial institutions who have been active and are active across the Asia region. I'd just like to mention that we have Joanne Lee, who is climate and investment strategist at APG, Seiji Kawazoe, Global Initiative Fellow at Sumitomo Mitsui Trust Asset Management, Melissa Moy, Head of Sustainable Business at UOB, and Emily Mackenzie, Technical Director at TNFD as well, and I'll be moderating the session. As we start off, I just would like to welcome each one of the panelists to introduce yourself briefly before we go into the discussion and in the order of the introduction as well. So starting with Joanne, and then Seiji, Melissa, and Emily.
Great, thank you, Monica, and hello, everyone. Really good to be part of this great panel session and also the webinar. My name is Joanne Lee. I'm a climate and nature strategist at APG. I joined APG to be based in the Netherlands early this year, but before that, I was based in Hong Kong. And I think some of you in the panelists also in the audience may recognize me. So Asia is very close to me because I've been working at First Venture Investors, Australia headquartered asset management company, while based in Hong Kong and leading their work on nature and biodiversity. So had a really exciting time working with Asia-based colleagues on this topic, and now having moved to Europe, and now I'm dealing with more of the European focused issues, and also working more closely with colleagues based here. So I think that's a interesting perspective that I could maybe share with all of you today. Thank you.
Yeah, and Seiji?
My name is Seiji Kawazoe, and thank you very much for having me today. I'm working for Sumitomo Mitsui Trust Asset Management. The company manages about $750 billion AUM, based in Japan, and a lot of our investors are known as investors are long-term investors. So therefore, they have sort of a focus on the sustainability mandate, so to speak. And I'm in charge of the global initiative, so we are involved in various nature-related, climate-related, and corporate governance-related initiatives, and I'm in charge of those areas. And thank you for having me today. Thank you.
Thank you. I turn over to Melissa.
Hi, thanks, Monica, and hi, everyone. My name is Melissa Moy. I'm the head of sustainable business at UOB, United Overseas Bank. We're a Singapore-domiciled ASEAN-focused bank. Excuse me. In my role, within the corporate sustainability team, we work with our businesses as well as our risk partners to ensure that we have alignment from an overall strategic perspective on how we think about and act on sustainability. Within that includes our commitment to net zero, as well as our recent commitment to be early adopters of TNFD. So we've done a little bit of work humbly in the nature space in terms of disclosures analysis, and we're also co-chairs of the Singapore Sustainable Finance Association Nature and Biodiversity Working Group. So happy to share what we've learned and hopefully learn from the others as well today too.
Thank you. And lastly, Emily.
Thanks, Monica, and thanks very much from me also to the AIGCC for hosting this webinar, for everybody for their interest in this topic. My name's Emily Mackenzie. I'm based in London. I work as Tony and TJ do in the TNFD Secretariat. And I've been with TNFD since it officially launched, leading the technical work as the technical director. My connection to Asia as a region goes deep because I grew up in Hong Kong, so it feels like home. And I've worked on nature and decision-making for my entire career, including on the Dasgupta Review, which was an influential review on the economics of biodiversity akin to the Stern Review. So it's been an amazing journey for me over the last 4 years to put those ideas into practice and to see them scale through the TNFD, particularly in Asia.
Thank you very much, everyone, for your introductions. Emily, I might start off with you because we've seen a good presentation by your colleague TJ of the global adopters, and there's quite a high percentage of adopters in Asia, especially in Japan as well. Given this and the high economic dependency that was shown by Wisnu, how do you view the broader adoption of nature-related approaches and trends in Asia?
Yes, well, I find it very exciting and impressive. I think that that high adoption in Asia is really demonstrating incredible leadership. Not only, of course, in Japan, which in itself is striking, but also in China, India, Singapore, growing in Korea and elsewhere. Australia, New Zealand. So we're seeing it across the board in Asia. And I think what's really interesting, going back to Tony's opening remarks, is that what we see and hear in Asia, in contrast to maybe some other regions like Europe, where uptake is also strong, is bringing very, very strategic mindset. I think Tony emphasized this phrase of enlightened self-interest. This is a strategic risk management issue, as well as opportunities that corporates and financial institutions can be seizing that benefit their institution as well as nature. And that's the common framing that I hear in Asia, where in other regions like in Europe, it may be moving more into a bit of a compliance mindset, a checkbox mindset, which is not so productive. And that's inspiring for others. So in other regions, when I'm in North America or in Europe, South America, people really want to understand what's going on in Asia. Why is there such strong uptake? What are the benefits? So we're developing and bringing case studies and example reports from Asia, not only around Asia for that learning within the region, but outside. So huge thanks to everybody who's involved in the region, because I think it's real. It's not overselling it to say that it's global leadership on this topic. And I think TJ also made this point, it's not only the common sectors that I think were emphasized in the SSFAA report and so on, agriculture, mining, real estate, but we're now working on technology sector guidance, things like semiconductor development, data centers and so on, which can be very, very relevant for some parts of Asia, as well as many of the others that TJ demonstrated. So that strategic mindset that I see in Asia is very inspiring, as well as, of course, just the volume of uptake.
Right, thank you so much. I think one of the key things is that we've always been saying that it's a strategy building exercise. So it's very, very much in line with, great to see that translate and to be able to show that across the board as well. I will turn over to the financial institutions to see how you're really looking at this as well. Firstly, to Melissa, as one of the Asia's leading banking group, you said modest, but I think it's more than modest what you have done to date. So could you really share what drives UOB to prioritize nature in your strategy, as mentioned by Emily, and looking at more broadly, what are the key challenges and maybe steps for other banks in the region can take to start understanding the financial materiality of nature across the loan book?
Sure, and thank you for that. And Emily, it's great to see that in Asia we can wave the flag quite high around this. I think from a UOB perspective, when we made the commitment to be early adopters for TNFD, one of the discussions we had around the table was, what continues to be material from us from a sustainability strategy perspective. And we'd done our commitments like many other banks around net zero, but really trying to understand what else is material from us from a portfolio management, risk management perspective, but also what's material from our clients. And I know at the time when we were considering it, we sort of heard two sort of trains of thought, right? One was, we really want to focus on climate. We really want to focus on this net zero, to bring in another element of understanding of policies, of potential target setting was a little bit, daunting, and something that let's focus on one and then move next to the other. I think our view was a couple of things. Number one, driven by the fact that ASEAN and Asia is disproportionately impacted by nature and biodiversity loss. It was really important for us to, at the very least, understand what this meant from a strategic perspective and the impact it would have on our clients and on our business. And I think number two, it was also driven by the learning we had from the exercise around target setting and decarbonization journey from a climate perspective. It's how do we take what we've learned there, understanding that a nature commitment is not a complete redo from the very beginning, take the best of our knowledge and understanding of that. Particularly when we made our commitments around climate, we took a very regional point of view, really diving deep into the context of what is most material from the countries in which our clients operate, that we thought that it was a good lens from which to approach nature. And given the hyperlocality of nature and nature-related risk and opportunity, it was something that we were quite keen to sort of, again, humbly start the conversation and see where it might be relevant from an Asia perspective. And so one of the things that we really fell upon was this idea that nature and biodiversity is so incredibly broad. When it comes to speaking about it as a financial institution and with the real economy, it can be a little bit, too much. So if you talk about polar bears and bees, although incredibly important, maybe not so relevant to our client in Singapore, it is not an easy conversation to then talk about, well, how are you thinking about nature related risk and opportunity? And so what we in our work we sort of settled on, part of it is the narrative around the fact that we need to start thinking about nature as a essential a part of every single economic value chain. That as Tony mentioned in his opening, our economies depend on nature as an input. And if we aren't thinking about it in that way, then we're missing sort of the opportunity and the risk that comes with scarcity of water, with air pollution, with declining soil quality. And that is all emphasized from a climate perspective. So Monica, to your question on, what are some of the things that the early steps that financial institutions can take? I will shamelessly plug the paper that we wrote with that the SSFA published in terms of the nature and biodiversity workstream. We positioned it as, number one, huge input from the Singapore financial community that was involved in this. It was something that was quite important, I think, for us to think through as a document that allows a financial institution that may be thinking about nature and biodiversity, those first steps. How do you then approach it with your leadership? How do you speak to your business about it? How do you speak to your risk partners about it so that it's not a sustainability team specialist, subject matter expert point of view? It really needs to be integrated in conversation, in understanding across all elements of the bank. Your leadership needs to buy in, and then your risk and your business partners need to come in. So it's really about the understanding of the concept of dependencies and impacts, the understanding of thinking about your own portfolio and how to think about materiality, and then the easy first steps that you can take to better understand, better educate, and then start thinking about engagement and start thinking about target setting and metrics at a later date.
Thank you so much for that. I mean, there are concrete steps, and obviously, if you look at it as a whole, there are many biomes and areas to cover. But it's really good that the publication you mentioned is quite thorough as well. So we've looked at it and it's quite thorough to look through. And it complements the TNFD documents that have been out as well. Maybe I'll turn over to Seiji because SM-TAM has really been actively involved in many of the global initiatives related to nature. Based on your experience engaging with other investors through these platforms, what are some of the key reasons nature is becoming an increasingly important consideration, particularly for investors in Asia? So over to you, Seiji.
Yes. Our house looks at the kind of nature-related risk as well as climate in a systemic risk category, but we need to think about in a more broader sense that by year 2050, global population will likely to reach 10 billion. That's really the pathway that whole global world is moving towards. And that meaning that there'll be a lot of stresses against the say climate and also nature capital. So the natural capital basically is a scarce resources, water, biodiversity. Those are the very scarce resources. So that's why we need to actually monitor what's to happen and assess them. based upon such innate frameworks. And a lot of the global initiative frameworks is really encouraging companies or the people to think about what are the nature dependencies. And when you look at the natural capital side of the businesses that has exposure to companies with those exposures, obviously they have a very long and wide supply chain, and a lot of Asian companies have those supply chains, and so the people must realize or understand what kind of supply chains that they're exposed to, and obviously there'll be a lot of stresses along the supply chain. So it's really, we have to encourage companies to think about what are their strategic way of thinking for the next 10, 20 years. So that's why these frameworks as a TNFD is very important, and to have and we are involved in the global initiatives to actually encourage those to have those frameworks to be incorporated into their strategic thinking. Thank you.
Thank you very much, Seiji. I think it's restating the sustainable growth of economies, the long-term view and its value chain. Maybe I will go over to Joanne now, because with your experience working on nature-related issues in Asia and now engaging primarily with European investors, what differences have you observed in how these two regions are approaching nature and investment decision-making? And from your perspective, what are the key challenges of adoption, and what are some of the low-hanging fruits that Asian investors could focus on?
Yeah, great. So I think actually there are more similarities than differences. I did think of some differences, but just to focus a little bit more on similarities, I think this whole topic of materiality is really advancing, and I definitely do see a lot more adopters and also corporates who are really understanding these issues and also trying to act on it. I think that's really great, and also better disclosure and reports. It's really exciting to see some climate and nature reports coming up in this region in Asia. And also, I think I've seen some companies that are really actively using technologies, AI and satellite-based imageries and everything on tracking and monitoring. So that's great. And also, I do see a lot of companies and financial institutions are facing similar challenges as well, especially on data and also interpretation, etc. But I definitely do see some differences. And I think it has to do with not about the individual institutions per se that are based in Asia versus Europe, but it has a lot more to do with the environment. So I think first there's some, I would say a little bit more dedicated commitment coming from the government. As you probably, all of you know about the EU deforestation regulation that's about to be applied from the end of this year. The laws like climate, nature, energy and climate law, like that's the French Article 29, I believe, it's really requiring financial actors to really act on better disclose on nature and biodiversity issues. That kind of regulation really, I think, not just forces individual institutions to report better, but also it helps create a value chain across the industry in the country to bring in more data providers, more consultants, more service providers, more tool developers, etc., to really build that ecosystem around it. So that there are more people who are experts in this space. I think that's a really important role for the government to play. And I think the EU has committed to allocating 10% of its budget to biodiversity by 2026, 2027. In terms of the government budget, I think that's also showing a huge dedication from the government. There are also other incentives and policies coming up, especially around nature credits. So I think all of these are really creating that kind of momentum to nurture more human capital in these countries. So I think that I do see as a difference, but I also see some emerging regulations and policies, incentives coming in Asia, maybe APAC. So I think that's something that to look forward to. The other two differences that I see is on the retail side. I see there's generally higher interest and maybe more customer demand coming from people. When I say retail, the retail investors, and also for APG as a pension fund, we're talking about beneficiaries. For example, our clients, they did a survey of their beneficiaries. What do you think are the important issues to focus on as a pension fund in terms of ESG and responsible investment? And 70% of the surveyed members survey members supported that, nature and biodiversity is an important topic. So that kind of level of understanding and interest, I think, all the way down to the beneficiaries and customers, I think that could also drive some of the momentum in different ways. And finally, I think the level of investor understanding and ambition is slightly different. But when I do say that, I don't mean ESG people in general. I mean across all of the organizations. So for an asset management company, it won't be just the ESG team, but it will be risk team. And as Melissa mentioned, it will be the board, the management, all the investment team members, HR, communication, compliance, everyone kind of being more on board with this. I think that also is a bit of a difference. So it's I think even without this alignment, I think one institution, if they have a really good team, really good a leader, a champion in this field, they can go quite far, but there can be some roadblocks and misalignment. So but I definitely do see some leading financial institutions doing a really great job and making a great stand in nature. But maybe the deviation is a little bit higher. Maybe there's a little bit more level playing field in Europe. So I think because of that reason, I think it's really important for leading institutions in Asia to share their best practices and examples. So it's really good to be with other colleagues who are doing a great work and making a great example for the rest of us. And for your next question, I think it's really interesting because the challenge, especially for beginners, who, if you're an organization that's interested in jumping into this world and starting some work but haven't really done it, I think as Tony mentioned and also Emily mentioned, this building a case on nature based on materiality and getting that organizational understanding, I think is a key challenge. And this is coming from my personal experience because it's like you want to do a good assessment. If you're in this team and you want to work on nature and you want to do some good assessments, in order to do that, you need data, right? But in order to access some good quality data, which includes ideally location information and more detailed information on companies, you need to have management approval to purchase the data or access the data. And to persuade them why nature matters, again, you need some data. So it's a kind of a vicious cycle if you really, don't approach it in the right way, especially if you don't have that early buy-in from the management team. So I think my advice is before, trying to convince to the management to purchase more advanced data, I think, that more advanced data, I mean, like with the location data and covering all of your portfolios per se. There are also a host of freely available tools that are really still good, and that's really helpful for anyone to start their work. And TNFD has mentioned it multiple times, and there are multiple NGOs and think tanks who have been leading on this, like Encore. There's science-based target networks, sector materiality tool. There's Forest 500. There's World Benchmarking Alliance's Nature Benchmark. There's Trace tool. I think TNFD has such a great job of listing all of these tools and everything in the knowledge hub. So that's really helpful. So I always tell to my peers that it doesn't have to cover everything. And what's really important, I think, is to identify through the use of these tools to understand which of the sectors are important for our portfolio or for our loan portfolio, for example, which countries or which activities or which topics. It could be based on your investment exposure, or it could be based on impact and dependencies, or it could just simply be your geographical exposure. But I think it really helps, especially the beginners, to really target and start with that targeted topic or area first before expanding it to everything, because that really enables you to start and get some initial understanding so you can expand further. Building on these initial assessments, you can, I think, start conducting trainings for all staff, maybe. Maybe you can do a little bit more targeted training for investment teams, and then maybe with management and board. And then because you've already done some assessments, you have some data, you have some knowledge, and you can pitch, okay, this is kind of our approach or strategy to go forward. And that could hopefully help you build your case and rationale why investing in nature data and also working on this further with more advanced tools makes sense. Over to you.
Thank you so much, Joanne. I mean, you've already started our second part of the discussion on how and the tools and methodologies as well. So great to see that, and we'll go into that details as well. with other speakers, but also just noting what you meant about the differences between Europe, developments in Europe, which is more systemic approaches and regulations versus Asia. I do believe the work being done under ISSB and the support of TNFD will really change things. There's a lot of adoption for ISSB across the different regulations across Asia, and the importance of integration of nature into the investment process as well. And great to see how you explain the buy-in on the organizational level. Just going now into a bit of more specifics around methodologies and tools. I just want to start off from the banking perspective, Melissa, for you as well. So how does UOB assess and quantify nature-related risk and opportunities across your portfolio? And if you can share specific methodologies and tools that helped understand that as well in your loan book, that would be great.
Sure. So we undertook an exercise, and you can read about it in our 2024 sustainability report in a bit more detail. But essentially, we worked using inspiration from TNFD, clearly, as well as using the Encore tool to really do a deep dive in our overall corporate and commercial loan book to really understand what is most material from a dependencies and impacts perspective. So we used there's 33 factors or 33 areas from a Encore tool perspective and looked at our loan book and essentially narrowed down that about 20% of our book is either highly dependent or highly impacts nature and biodiversity. What we did do, though, is we wanted to double click not just on the general sector itself, but really look at the value chain and to take a value chain approach to understand which parts of the value chain are most highly impacted or most dependent from a nature perspective. And so within that 20%, we're focused mainly on three major areas. First is agriculture, second sector is metals and mining, and the third is built environment. And the reason those three we chose to double click on is primarily because, number one, in particular, they're either material to our portfolio or the impact or dependency was quite material. And within that, we then took a look on two additional factors. The first was geography, so understanding again that nature and biodiversity is hyperlocal, that you needed to put a geographic lens on top of your analysis to really understand that an asset in Singapore is very different from an asset that sits in Indonesia, or a company operating in Singapore is likely very different from a company operating in Indonesia on various factors based on, already the degradation that's happening, some of the challenges that come with resource scarcity, so on and so forth. The other overlay that we did was from a value chain perspective. So when you talk about something like agriculture, intuitively, we know that agriculture production is highly dependent on nature for its ability to be successful and to grow economically. Whereas agriculture, downstream, more sort of manufacturing related to the upstream production is not as directly dependent on nature, but because it depends so much on that upstream production, then you need to be thinking about that as well when you're assessing risk within your portfolio. That took a lot of expert judgment in terms of which parts of the value chain are more important. And so it's still a bit more of an art than a science at the moment. On the geography perspective piece as well, I think one of the biggest challenges, and this has been mentioned multiple times, is data, and in particular asset-related data. And so when from a banking perspective, the coverage that we have a lot of SMEs, we have a lot of regional companies, you have headquartered in one company with assets all around the region within the agriculture sector. So there's a very diverse availability of some granular data and some that's not. And so I think part of the entire assessment process and part of the entire sort of initial thinking was around, let's get a general sense of what are the sectors and subsectors that we need to be thinking about. Then let's move on our next step of what do we double click on? What are the particular regions we want to think about? What are the particular subsectors we want to think about? Where can we start thinking about doing improved data quality by reaching out to our clients, by sourcing those data sources, what's realistic and what's not realistic, and how do we start thinking also on an opportunities perspective? So one of the things that we also realized when we talk about deploying more financing from a natural capital and biodiversity perspective is that we need to really be thinking about the nature-climate nexus in terms of how we think about sustainable financing. And a lot of the traditional green financing, sustainable financing that is climate related, there's a huge overlap from a nature perspective. So how do we think about doubling down on those opportunities? How do we think about the wider range of engaging with our clients to have them think about how it is both nature and climate, and then that sort of grows the understanding of the opportunities from a sector perspective. So what I'd say is the tools are great that exist. So Encore we used the WWF biodiversity risk filter, a lot of expert judgment. We had to, as I mentioned before, bring in our risk counterparts as well as our wholesale banking sector specialists to really double click and try to understand within the context of where we operate, understanding the limitations of some of the data that we have. How does this start to shape our disclosure, our deeper understanding, and then the efforts that we have moving forward?
Right, thank you so much. I'm just conscious of time. I am going to ask the panelists to respond within like a minute, but I just want to see if Joanne has anything to add from an investor's perspective on specific tools. I know quite a lot of it's similar.
Yeah, I think you already others mentioned Encore. We use Encore as well, also to quantify the portfolio-wide impact. APG uses ISS's biodiversity impact assessment tool. I think what's really driving APG's work on this space is our clients' strong ambitions and policies on nature and biodiversity. Based on the targets that they're quite ambitious to be achieved by 2030, we are focusing on all of the risk, opportunities, impact, and dependencies. And one thing that if I could add is the work that we've been doing, especially in our real estate and infrastructure team. They use the integrated biodiversity assessment tool, IBET, for direct investments where locations can be mapped, that we have the good understanding of that. So it's mapping the IUCN red list and protected areas, key biodiversity areas. And I think identifying those locations is one thing, but also being able to quantify, measure, and utilize these data points into effective investment decision making is the next step. So I think that the point that I really want to highlight is when we do all this assessment, that's really great. But I think the next step and the question that we often ask ourselves is what next? What does that actually mean to our investment portfolios? What are we going to do about it? What kind of narratives are we going to make? So that's where we are. And the other thing that we are really interested in is connecting environmental risk metrics, such as maybe water usage, for example, into financial risk data. I think this is something that's emerging, and I do hope to see more advancement in terms of the methodology and also technology and data to move this forward.
One of the areas I want to go to, Seiji, is the actual area of engagement with portfolio companies. You really actually do engage a lot with companies in Asia relating to nature-related topics. So if you can share some insights regarding how companies are viewing this, it would be great.
Yes, I think one of the areas that we have a dialogue with companies will be to focus their attention on their supply chain, sustainability supply chain, how resilient their supply chains are. Basically, those are the areas that in majority of our dialogues happens and occurs, and how in order to judge their sort of the expertise, I think those are the areas that we typically have engaged in, areas like transparency, traceability, and also how much money put into those technologies, for example, being sort of put into those to manage the sustainable supply chains. And probably those are the key areas that these investees, the companies, are really thinking about the risks going forward. They need to think about these sustainable supply chain in longer term. Would this be stable? Do they need to have substitute? Do they need to diversify away from the current supply chain? So I think it's really about the nature capital resources, nature capital related dialogues and engagements happen around this how to maintain the resilient supply chain going forward. Yeah.
Thank you so much, Seiji, for your concrete answer. And lastly, Emily, if you can share, you have an abundance of resources and support at TNFD. There's certain things you would like to highlight. Please go ahead.
Yeah, given we're at time, and I know TJ and Tony gave a really rich overview, maybe I'll just mention one thing that they did not and focus on that. So actually, just 2 weeks ago, we put out a discussion paper that's particularly relevant to financial institutions. It looks at identifying and assessing and disclosing dependencies and impacts on nature in financial portfolios, because in our financial institution guidance, we have 2 metrics which look at potential exposure by high impact and dependency sectors or sensitive locations. And so we collate in that paper some of the challenges and barriers to doing this effectively. Many of my fellow panelists have mentioned around data gaps or attribution complexity, asset location data, the lack of methodological consistency across some of the tools and data sets. So we lay out some of those challenges, and we also explore some potential solutions, particularly on metrics and on data. So we'd really welcome feedback. That's out for consultation now. The deadline is the 3rd of November, and would really welcome feedback from participants on that. Hopefully it goes to the heart of some of the challenges you may be experiencing in doing these assessments at the portfolio level, and then of translating them into decisions and action, as Joanne emphasised.
Great. Thank you so much. I feel like, as always, towards the end, we have lack of time to discuss further and it gets more interesting. But we do have great teams, both at TNFD and at AIGCC, to support any questions or queries you may have. And just to mention, at AIGCC, our whole theory of change is really to drive and support Asia's transition, both in net zero, climate resilience, and nature positive economies. So all of that is coming together. I'm personally really excited to see the developments of TNFD, especially within nature in transition that's coming out. And hopefully the discussions will continue, definitely. And it's not just about risks, but it is also about opportunities. So there's been a few questions around that, and that work will develop over time as well. But with this, thank you very much, everyone, for joining us today, and we hope to continue the discussion. Thank you.
Thank you so much.